Hello guys, thank you very much for joining in. I hope everybody is able to see me, hear me properly. Okay, we're going to be starting out with this session on FRM Level 2, how to start your preparation for your FRM Level 2, and I'm talking from the perspective of the December exam. If you guys are able to hear me properly and see me properly, give me a quick confirmation on chat. I hope everybody is able to hear me, see me properly. We'll be starting out in a few minutes. What about others? Give me a quick confirmation if you guys are able to hear me properly and see me properly on the chat section. Okay, it seems people are able to hear me properly, so we'll start with the session now, how to start your preparation for your FRM Level 2 exam in December. So the agenda for this topic is that I'll give you basically the introduction to FRM Level 2, what all books are there, then I'm going to deep dive into individual book. And also I'll be talking about materials to be used, how you can start preparing for which material to primarily use, because a lot of questions are there in students' mind with respect to which all different materials are available. Okay, so I'll be giving you a set of material which you can use. Okay, then I'm going to be deep diving into individual book, talking about what all that book is primarily talking about, what all few important chapters from that each book. Okay, and further I'll be giving you the timeline, how you should plan your preparation for the December exam, which book you should pick up first, how should be the way of preparation. Okay, and then I'll be giving you few quick tips on how to start the question bank solving, when to start the question bank solving, and what should be you keep in mind when you're solving that question bank. Okay, and finally I'll be talking about few important things which, if you have cleared just now level 1 exam, then what is the change that you would find in your FRM level 2 exam. That part I'll be talking about, and finally few quick tips for our preparation, and I'll open up for queries from you guys. Okay, in between, in case any one of you is facing any queries, then you can put that query in the chat section. I'll try to address it as soon as possible. Okay, let us start with the first thing, the introduction to FRM level 2 content. So this level 2 exam is going to be now CVT exam in the December month, and it's going to be an 80 question exam. There is no negative marking for it. Okay, and it's a 4-hour examination. The books which are there for your examination, the first book, the market risk book, and second book, credit risk and operation risk. So these 3 books are heavy weighted book. 20% question would come from that topic. Basically around out of 80, around 16 questions would come from these 3 book. Okay, so obviously the weightage is, since the weightage is high, you will find the pressure of completing these topics will also be high, especially the operation risk, because the number of chapters are very huge. Okay, and also credit risk, but credit risk is slightly easy to understand, more logical, and operational risk is more theoretical. Okay, then you also have the other 3 set of books which are primarily your current issues, investment management, and liquidity risk. Okay, I'll be talking about individual book now in detail. The reason I wanted to give you this bifurcation very clearly, because a lot of students who go for the exam, they are not very sure that how many percentage bifurcation is there. Hence I'm putting it very clear to you guys that investment management and liquidity risk is also important, because only it's 15%. But when you compare the book with respect to the weightage, the number of chapters are very high in liquidity risk and in operational risk. Okay, so you have to keep that in mind, and majority of the chapters in these 2 books are theoretical. Okay, so let us start with the material that we will be using. Okay, so ideally there are so many material. There is BT material available, there is Swagger available, there are a lot of people who go for Wiley as a material also. Okay, I would definitely recommend that you can prefer Kaplan's Swagger as your main book. Okay, and also the GAR book, because there are certain chapters where Swedger has not been very clear or very in depth in explaining things. Okay, so for those few chapters you can go ahead and read GARP. Okay, and those few chapters are primarily from your credit risk, market risk and investment management book. Okay, operation risk, apart from the Basel topics, rest everything can be referred from the Kaplan Swedger. Liquidity book, there are 3-4 chapters. Apart from that, the majority of the content you can refer from Swedger. So what I wanted to highlight is that you can keep your Kaplan Swedger as your main book for your reference, and for few chapters where you need more clarity, you feel that there's going to be more dependency, okay, or basically you're not very clear on the concept, then you can go and read the GARP book in that content. But whenever you're picking up the GARP book, definitely please make sure that you have sufficient amount of time, because if you're working and reading GARP for every chapter would not help you. Okay, hence Kaplan Swedger would be useful for you. Lot of students, basically this is a preparation part. Okay, but in terms of question bank, definitely we also provide you question bank for your preparation. But apart from that, also there is BT material, BT question bank, which you can try solving, Bionic Turtle, okay, which is a good quality question bank, and a lot of students who go for the exam, they also solve it. Okay, but what I would suggest you is you can use a base question bank which is slightly easy, and then you can go for a BT question bank, because BT question banks are very few, but the quality of the questions are very high. Okay, the only problem with those question banks are that the number of quantity number is slightly low. Okay, so only relying on that question bank might not be helpful. Let us go to the individual chap book and the overview of that book. What exactly this book wants to test in the exam. Okay, the first book, which is your market risk book. Now this book is primarily an extension of your level 1 valuation and risk model. Okay, because there are specific chapters, okay, in this book which are going to be talking about VAR. Okay, so you have backtesting VAR, you have VAR mapping. These chapters are related to the VAR concept, which you have read in your level 1. Okay, and also there are certain chapters which are specifically focusing on the term structure. So in your level 1, when you started reading book 4, which is valuation and risk model, okay, in that book the focus was also on bond valuation. Okay, in that content, okay, the bond valuation content, we talked about, we basically assumed interest rate. But over here in level 2, you guys will be understanding how interest rate term structure is created, what are the factors are involved. Okay, if you increase the maturity, what is going to be the impact? If you increase the volatility, what is going to be the impact? There are certain models also which are going to be introduced in this in level 2 in your market risk book, which is going to be specifically focusing on how do we anticipate the term structure. Okay, and this is also used in your mortgage backed security, because we create the interest rate term structure on a monthly basis. So ideally this forms the base. If you look at the entire market risk book, there are 4 chapters focusing on the term structure of interest rate. That is important chapter. Okay, I have highlighted out of those 4 chapters, I have also highlighted which are more important. Okay, then there are certain chapters which are related to VAR. Then there are few chapters which are related to volatility and correlation as a concept. Okay, they are giving you the basics of how exactly correlation impacts and increases your market risk. They have given you the detail about it. There is one chapter which is talking about volatility smiles, okay, which is an extension of your Black-Scholes model chapter. Whatever you have read in Black-Scholes model, or the formula of call, formula of put call parity, that is the extension. The next part, how exactly it is used in the market, that is nothing but your volatility smiles. Okay, so I have given you a brief overview of the market risk book. Now I'm going to be coming towards the important chapters. Okay, now I am talking from the experience that I have seen in the past previous exams, the questions coming from these topics. Okay, questions coming from these topics. For example, backtesting VAR, okay, and VAR mapping. These two are very important chapters from your market risk book. We have seen many questions coming in the mock papers, also in the GARP sample paper, also, and also in the actual exam, in the historical exams. Okay, when we talk about the term structure of interest rate, the first 2 chapters, which gives you the base of why we are looking at term structure and what all basic things which can impact your term structure. So these are the 2 chapters which you should focus on. The third chapter talks about the model. Okay, in that the model 1, Weizsäck model, Hooley model is also important, but the entire chapter as such is not important. Only 1 or 2 model is important from that chapter. Okay, so in the term structure of interest rate topic, there are first 2 chapters the signs of the term structure model and the evolution, both of them are important for your exam perspective. You can expect questions, theoretical questions coming from that chapter. Okay. Next, the volatility smile. Like I said, this is also an important topic because you can expect question directly. The calculation driven questions also can come from this chapter. Okay, now over here, since this is an extension of Black-Scholes model, this becomes important because when you are looking at market risk, the volatility plays a very, very important role. Hence, this chapter is important. Then fundamental review of trading book. Okay, now previously in the GAR topic, they used to add this FRTB chapter along with the Basel rule. Okay, because this is an extension of Basel rule focusing on market risk. Okay, so this chapter was ideally included along with the Basel risk related chapters in your operational risk, but now they have explicitly highlighted it on and included it in the market risk book, because FRTB is nothing but how you are managing your trading book. Okay, how you are adding an asset or how you are removing the asset, what all rules which has been introduced to make sure that the bank do not get that regulatory arbitrage between the banking book and the trading book. So that was the logic of adding this chapter. So this entire book is basically having 16 questions, 20% weightage. So this is an important book for the exam, and also heavily logical driven. Okay, it's not pure theory. If you could not understand the logic, a lot of things are connected. Okay, which you have read in the first chapter, first book. Okay, it's a connected part to it. Let us go to the second book. Okay, let us go to the second book. But before we start the concept, if there is any queries, kindly mention it on the chat section. I'll try to address it as soon as possible. Let me go towards the credit risk management book. Okay, this book is also very important. Okay, the reason being the chapters are vast. Okay, and there are around 19-20 chapters in this book, and the bifurcation, if you look at the chapter, there are around 6-7 chapters only focusing on counterparty risk and the credit exposure that you face. So whenever you enter into an OTC transaction, you have to understand netting. You have to understand what is the collateral that you're going to be passing on. Okay, the rules related to collateral. There are also risk which you face with respect to what will happen in the future, how your exposure can increase, and the points related to it. So that is what is covered in this entire section. So wrong way risk is also a part of it. Credit value adjustment is also a part of it. How exactly you price the credit risk in your valuation, that is also connected to this bunch. Okay, counterparty risk and credit exposure. Okay, so and there are 6-7 chapters related to it. There are again 5-6 chapters related to securitization. So you guys can see that the connection is with level 1, because in level 1 we talked about anatomy of great financial crisis. We talked about securitization as a base because we learned about mortgage and mortgage-backed products. So entire thing, they will give you an introduction obviously in level 2, but the idea is that they will try to help you understand when you are creating a structured product, how do you manage the risk of that structured product. That is the core of this entire section. There are around 5 to 6 chapters only focusing on securitization. Okay, there are around 4-5 again chapters which are related to models. So there is one chapter which talks about the rating assigning methodology. That means the models which the rating agencies are using. So there is one chapter related to it. There is also one chapter which focuses on the probability of default models. So basically they are talking about hazard rate related models. So that is also there. There is Merton model which is discussed in detail. Now apart from these 3 big bunch, there are certain standalone chapters. Okay, like for example capital structure and bank. Now previously this chapter was in level 1, they have included in the level 2 now. Okay, now there are certain other chapters like credit decision. Those chapters are very basic and simple. Okay, now in the credit risk book, if you remove this section of credit risk model, entire book is very easy. But more conceptual driven. There will be things which you have never heard in level 1, and those things will be in detail. For example, there's one chapter on future value and exposure. Okay, which gives you the detailed understanding of the positive side of an exposure, because till now in level 1 we were only focused on the negative side of the exposure, that was VAR, but this chapter will only focus on the positive side. When you are looking out to receive money from somebody, and if you default, then if the counterparty default, then what is the risk that you face? Okay, so that is being covered in detail. So this book is important for the exam perspective. There are 16 questions which you can expect out of that entire thing. There are few important chapters which you should focus heavily when you're preparing. Let me talk about this chapter, spread risk and default intensity models. I've heard that there have been straightforward formula driven questions coming from this chapter, hazard rate related formulas. Okay, the last part of the chapter, there is also the term structure of hazard rate, that there are theory questions coming from that content also. Okay, and this chapter is actually a part of the modeling related chapter, the credit risk related modeling chapter. Then there is structured credit risk. This chapter is also very, very important because this is the core of your securitization. Over here they are talking about how the waterfall structure will impact your risk. Okay, if you are facing, if you have already purchased a junior tranche, how can you reduce your risk by taking a position in the CDS? So all of that is covered in detail. Capital structure in bank, this gives you the extension of your level 1 expected loss, unexpected loss. Over here the calculation will come in detail. Next is collateral. This is basically the counterparty risk related chapter. There are other chapters also, netting and all, but collateral, future value and exposure, credit value adjustment, these three chapters are a part of that counterparty risk bunch, and they are very important for the exam. Total chapter would be around 6 to 7. Okay, then there are other two chapters which are introduction to securitization and understanding securitization. Now this last part, understanding securitization, is very, very important because it talks about the problem, that the entire structure of securitization and where exactly the problem can arrive. Okay, so that is the core of the securitization, both of this chapter, the structured credit risk and the understanding of securitization. You have to be very, very clear for the exam. If you are going for credit risk, you can expect questions from these two chapters heavily. Okay, let us go towards the next book. Okay, so the next book which is of a heavy weightage is operational risk book. Now this book will give you a lot of pain in life because it's a very, very cumbersome book, heavily into theory. There is only one particular 4-5 chapter chunk which is related to Basel. Okay, so that is slightly more logical driven. Okay, rest all the chapter are common sense, but the content is so heavy that you will ideally have to read this entire book twice or thrice before the exam. There is no alternative to this. Okay, there are, so one chunk, one bucket in this entire book is related to Basel. Basel related risk. They are talking about solvency risk. They are talking about Basel 2, Basel 1. There is a separate chapter on Basel 3 also. Okay, what change has been introduced and all of that. So that entire chunk is important. Next, there are few theory chapters which are related to enterprise risk management, related to some principles of operation risk management. There are chapters related to risk culture that can impact the risk management in a bank, risk data. So all of this is there, but you have to just read it, because even if you read it once or twice, you would remember very, very small. The more you read, the more recall value you have on those kind of chapters. Okay, there are certain chapters which are related to risk resilience. What does that mean is, if suppose you as a bank face any problem, okay, for example a cyber threat, okay, or for example a natural disaster, how would you come back and fight it? That is the core of those chapters. So you need to have a contingency plan, you need to have a BCP plan. So all of this has been discussed in those chapters in detail. There are certain standalone chapters also. For example, there is one chapter on information data related, but very, very less chance that there might be questions related to those chapters. Now I've tried to give you some important chapters on the basis of my experience. Okay, so banking conduct and culture. Now this is important from the perspective that banking sector has seen a lot of fraud in the recent year. So they would want you to understand that what is the risk that is there, what is the risk that is there in the content. Okay, what is the risk that you see as an FRM candidate? So that is being covered over here. Then there is also supervisory guidance on model risk management. Okay, now we are very much concerned about this because we have seen that models which the banks are using not only for valuation but risk specific have failed in past. So they have not been able to give you an accurate picture of the risk, and they have underestimated it. Hence the chapter becomes important for your exam. Okay, there is one chapter which is also talking about risk capital attribution. Okay, RAROC, return on capital. That is, there are certain calculation driven topics which can come in your exam, so that is also the important chapter that is there. Then there is management of anti-money laundering. Okay, so you would have seen that during this COVID situation also, banking sector has been very cautious in getting the client onboarding. They are entering into new avenues like AI, machine learning. They're using it to increase the client interface. So where this kind of thing is going to happen, they also need to be aware about the AML related risk. Hence this chapter is there in the operational risk logic. There are two chapters from the Basel category. Basel, there are 4-5 chapters. I have highlighted it specifically because it contains a majority of the content when you talk about Basel in the operation risk. Okay, so these are the few chapters which I feel that can come in the exam. Okay, then also with respect to this book, it's a heavy weighted, that is 16 questions can be expected from this book. Let us go towards the next book, which is liquidity risk. Okay, now if I talk about liquidity risk, this book was introduced in 2020. Okay, previously we had only 5 books. Now this book is fairly new. Okay, and it has seen only one exam, that was in January. Okay, the content is very good. When you read about this is refreshing. Okay, and you would understand how bank actually thinks about maintaining liquidity in detail. Okay, so this part, there is one category of chapters which is explicitly talking about how a bank is monitoring the liquidity risk and how exactly they are taking efforts to maintain that liquidity. What all avenues they would have in making sure that they have liquidity available. Okay, there are certain chapters, standalone chapters within this, which focuses on the reporting side, which focuses on there is one chapter on liquidity and leverage, one chapter on illiquid asset. So there are certain chapters which are primary standalone chapters. Okay, now if you look at the important chapter from this entire book, liquidity and leverage is important because it has a lot of concept specific to leverage. Okay, and it also talks about liquidity adjusted VaR in detail. So that is also important. Liquidity reserve strategies. This strategies and policies part is very important for your exam. You can expect questions directly coming on this topic. Perfect. Let us go towards the next part, which is monitoring liquidity. Now when we talk about monitoring liquidity, the focus here is again that the bank, how exactly is bank looking at risk and how exactly they are reporting it. Okay, they might have that certain rules to make sure that they have certain amount of liquidity available. Failure mechanics of dealer banks is also very important. Contingency funding plan is also very important. Previously these chapters were in operation risk. Now they've been added explicitly into liquidity risk because it talks about the survival of a bank. Okay, then there are 2 chapters related to managing and pricing deposit. Now this is primarily focused on retail bank. How exactly when they are taking deposit from the customer, what all different ways through which they would calculate or they would give the pricing to the customer. How do they decide how much amount of rate of interest they should give? So that is being covered in detail. Okay, that is from the deposit side. If you have non-deposit liabilities where a bank is raising money from the market to maintain the liquidity, what all avenues are there, what all different risks are available. So that is being covered in detail. There is one chapter which is related to US dollar shortage, which we saw. Okay, after the crisis, the entire global economy, there was huge shortage of US dollar and how Federal Reserve helped it. So from that perspective, you can expect a question from this chapter. Also, illiquid asset as a content, this chapter was previously into risk in investment management book, but now they have moved it to liquidity related book because we have an entire section talking about liquidity. This is also an important chapter from the exam perspective. Okay, I'll be having few more videos in future where I'll be taking the entire book and I'll be giving you important concepts from each chapter also. See, today because of the time constraint, I'm not going into detail of those. Let us go towards the next book, which is investment management book. Again, it has a weightage of around 15%, 12 question. Now this book, if you want to start reading this book, make sure that from level 1 you have your capital asset pricing model, or basically the base of portfolio management is clear, because this book starts with factors, factor theory. It gives you an idea that when you hold an asset, you do not hold it. It's actually hold the risk at factors underlying it. For example, if you're holding a bond, you're actually related to the interest rate risk underlying the bond. So it starts with those concepts. It tells you about CAPM, how exactly CAPM failed, okay, but what all things we learned from CAPM. So that is going to be covered in the initial part of the chapter. Then they will take you towards the portfolio part. Now we have talked about individual asset, then they will take you towards the portfolio, how to construct a portfolio, how to understand the risk of the portfolio, how to do reporting of risk of the portfolio. So there are 3-4 chapters related to it. Then they will take you towards the fund which has different portfolios, different fund managers managing portfolios. Okay, so if you are a fund house, how do you look at individual fund manager? How do you compare the performance of individual fund managers? Okay, so that is being covered. So this book will basically talk about portfolio management. They will take you from a single asset to the entire fund house. That the content is very, very interesting. There are certain chapters which are related to calculation driven. So I'll be talking about that in detail. So it starts with the factors, then it takes you towards the portfolio construction and its risk, and then finally it takes you towards the evaluation of the fund. You have different fund managers. How do you evaluate which fund is doing good? Okay, within that fund company. Okay, important chapters for your exam is factors. Very, very important. Different factors. Theory questions generally come from this logic. Alpha is also very, very important. The low risk anomaly, right? That is a very, very important chapter. And portfolio risk analytics. This chapter has content related to your level 1 also, because it talks about the component VAR. This talks about individual VAR, okay, marginal VAR, and how do you take decision when you want to include an asset in your portfolio. You will take a decision by looking at the VAR. Okay, so that chapter focuses. So calculation driven questions will come ideally from this chapter. There is one more chapter which has a lot of sums, is portfolio performance evaluation, M square topic. VAR and risk budgeting is more theoretical, but it talks about when you're already having a portfolio, how do you understand the risk in detail, okay, with respect to the investment management. If suppose you are a pension fund investor, if you want to understand the risk of pension fund, what are things you will look. So that content is covered over here. This entire book has a weightage of 15%. Okay, from the exam perspective, you can expect out of 12 questions, around 2 or 3 maximum will be calculation driven, the rest majority will be theory. Okay, next book, I'm going towards the last book of this FRM level 2, which is focused on current issues. Now you might have read about this also and heard about from your friends that this book generally changes every year, because the logic of GARP is basically to add new content which is related to the financial market, which is happening currently in the market, to be added to your curriculum, so that when you are aware about it when you go for interviews also. Okay, and if you look at the current chapters in this book, okay, there are chapters focusing on the fraud and the financial risk. Okay, so those chapters are important, because we have seen, especially there is a chapter on financial crimes in COVID-19. You can expect a question coming from that chapter, because it is related to the current thing that is happening. Okay, there are chapters related to cyber risk and climate risk also. Okay, now these chapters have been explicitly added, okay, because we as a banking sector has seen a lot of cyber risk happening even before COVID. Okay, so that is also an important topic. Machine learning and artificial intelligence, there is also a bunch on those chapters. Out of that, machine learning is very, very important, but these topics are not removed. These were also there in the previous year, but they were not removed primarily because we see banking sector moving towards it in the near future. Okay, so they want you to have the entire understanding about the basic understanding about what is machine learning, what is artificial intelligence, how exactly thing works. So they've given you the overview so that when you go to the industry and start working, you have that base. Okay, when you talk about the important chapters, LIBOR related chapter is there. We know that in 2012 we came across a LIBOR scandal, and then we realized that we have to move away from LIBOR and replace it. So we are going to be moving toward SOFR as an alternative. So there are 2 chapters which are focusing on LIBOR. Okay, and this is going to impact the market. So that's the reason this chapter is also important for the exam. Now, like I said, machine learning is not removed, so obviously the institute feels that this is a related concept which is happening to the market. Green swan Now this is theoretical, but I have explicitly added over here. Now the content over here is that there can be certain things which can happen in the market which has never happened previously, and the effect or the loss to the market is very huge. So they have also added those kind of topic, because this is added because of COVID-19. Okay, because they want to, because nobody expected COVID-19 to come, right? So as a banking professional, as a risk management professional, you should be ready for those kind of things to happen in the future. So they've explicitly added that chapter with that logic. Okay, so we have covered all the 6 books in detail in terms of what all important chapters are there, what that books want you to understand. Now there is a top. I'm going to be taking you towards a timeline of preparation. If suppose you're starting today in the mid of May and you have taken a decision that I want to go ahead and give the exam in December, what should you do? Ideally, you should bifurcate your entire timeline till December into few important timelines. Okay, the first timeline or first important milestone is basically the 31st of July, because that's the end of your early bird registration of $550. Okay, the second deadline would be the end of September, and third would be end of October. Okay, now I'll give you the entire part. The first thing I'm going to be focusing on 31st of July. Okay, the end of early bird date. Okay, now I want you guys to go through the content beforehand. Before you reach the 31st of July, make sure there are 100 chapters in the book. Okay, make sure you go through at least 75 to 80 chapter, because this will give you a good idea whether you should go for December exam or not. Whether you should go for December exam or not. That is the logic that you should keep. So a lot of people are asking question right now whether they should go for exam or not. I'm saying don't take that decision now. Read the content and then take a decision in the month of July. Now there are a lot of students whose exam has been moved. The level 2 exam has now moved from May to December. Obviously they don't have any other option. They have to go for the exam. Now what ideally they should be focusing on, make sure that they read the entire content. They read the entire content once before July. Now how should they do it? Okay, if suppose you are a working professional, ideally what you should be focusing on is you should find 2-3 hours in a day, for mostly 2 hours, okay, where you are having heavy concentration. Okay, over there you should focus on those chapters or those book basically which requires more analytical thinking, more understanding related concepts, and those books are your investment management, credit risk and market risk. So what you can do is you can divide your day, okay, into that 2.5 hour where you would be doing the proper study. Okay, so pick up, suppose you're starting today, pick up the investment management book. Okay, start reading the chapters from starting, because it's in a particular order. Okay, you do not have to change the order. Go through the entire content, complete it till the end of May. Okay, this should be your main reading time. Also, you should be able to find half an hour on a daily basis where your concentration level might not be that high. So you can start reading a theory related book, for example, operational risk. Okay, spread the entire book. Okay, operational risk, 1 chapter 1 day. Don't think about solving questions now. Okay, you should start solving question after July. Now only read the content. Okay, spread the entire book in the next 15-20 days. Read operational risk thoroughly. Okay, then when you reach end of May, okay, if suppose you are able to complete the investment management book, that's well and good. If not, then obviously you'll have to carry forward, but the credit risk book is vast. Okay, make sure again you have a main time in a day, 2.5 hours, where you will focus on picking up that main book, for example credit risk book, and you will start reading that topic. But when you read the credit risk book, there are 3-4 chapters which are related to modeling. I would suggest don't go into those chapters now. Read all the other entire content in the first go. Okay, and then if you have time within that month, then only read that topic, because those chapters are heavy, and if you start reading it in the first go, you will feel demotivated. So don't go into those 3-4 chapters in the first go. Okay, simultaneously in the month of June, what you can do is you can start picking up liquidity risk. Obviously in the liquidity risk you will have to follow a certain order to read. Okay, there are certain chapters which are related, but this entire, you at this point in time you have to just read the content. Pick up special book, just read it. Okay, 1 chapter every day. Okay, you should be able to cover at least 1.5 times the liquidity risk book. Okay, when you enter into the month of July, okay, Market Risk is the book that you should pick up. Okay, Market Risk book is interesting book because this is related to level 1 also. Okay, make sure that you read that Market Risk book in the important time part, and then in the evening part where your concentration is not very low, you can pick up the current issues book. This is more like reading a novel because you have to just read the content. Okay, any which way, see, remember this point that the operation risk, liquidity risk and current issues, since this all of 3 books are heavily theoretical, you would not remember the content easily, so you will have to reread that content again. Okay, so this is your first milestone which you should be doing before 31st of July. Okay, I'm again repeating, main topic, main time of your preparation, pick up investment management book, credit risk book and market risk book. Every day only keep half an hour maximum for these 3 book, operation, liquidity and current issue. Just read it every day, 1 chapter. Okay, let us go towards now after July. In the month of August, what you should ideally focus on is solving. But now when you're solving, you'll have to do the revision, and this was the purpose that I said don't solve the question bank initially. The reason being, once you start solving the question bank, you mentally become sure that I've done this chapter and you will not come back to this chapter. But now since the question bank is pending, you have to come back to the chapter and read it again. You have to do the revision. Okay, so now in the next 3 months your focus has to be do the revision and start solving. Do the revision and start solving. Okay, now but when you're doing the revision, make sure that you're reading at least 2 to 3 chapters together and then solving. Okay, again do the solving in the same order. Start with investment management book and market risk book. Okay, do the entire solving in the month of August. If not possible, then again you can take some time in the month of September. Okay, but the idea is that you complete the 3 important books question bank in the first go, and then you divert your attention or energy into solving operation risk and liquidity risk. But what I would suggest, you should not break that rhythm of reading half an hour every day out of that 3 book, operation risk, liquidity and current issues. Just keep reading. Don't think about this that I've read this chapter 2 times. Don't think about it, just keep on reading it. You will see the benefit of this reading when you reach November. Okay, so but in terms of question bank solving, you should first focus on the 3 important books and then move towards operation risk, current issues and liquidity. So in the next 3 months, from the 1st of August till the end of October, you should do the entire solving. This is going to be your first revision and the solving. Perfect. Now once you have reached October end, okay, then over here your focus should be on revising and doing some sectional questions, taking the entire book, doing some questions. Okay, it can be from Schweizer, it can be from third party also, or it can be from your GARP past sample papers. Okay, now look at this part. When I talking about revision, again I am focusing more on these 3 books, but what I've done is I've spread operation risk, liquidity risk across that entire month. Okay, again doing a revision of that book. Now over here, when you're doing this book, revision of operation risk, liquidity and current issues 3rd time, that is where you will start recalling a lot of things, and you will understand why I was focusing on reading the book only half an hour every single day. Okay, now I bifurcated that you have to start doing the revision. Obviously, since you are reading it for the 3rd time, all the books should be fast. You should be able to revise the entire book very fast. If you are able to get some summary notes, that would be really helpful for your preparation, because I provide my students with summary note, because at this point the last 1 month, in the month of November, is very critical. You should focus on completing the book in next 2 days, 3 days. For example, if you are looking at investment management along with your job, if you can focus and complete the book in 3 days, that is good. Similarly, if you are looking at market risk, focus on completing the entire revision in 5 or 6 days. So you'll have to bifurcate in that way. Okay, you can start giving the sectional test in the last week of November, when you have already done the entire revision, and then you're confident enough on the content and you're going ahead and doing the sectional test. You'll move towards the 1st of December. Okay, now over here ideally you should focus more on mock paper solving and also the past sample papers from the GARP. Okay, don't miss on this topic. Okay, because what happens is that when you start solving the GARP sample paper, you get habitual to the way of questions that can come in the exam. Okay, obviously in the exam you will find few questions 1 or 2 level above the GAP sample paper, but at least majority of the question you will find it in a similar language. Now also lot of people can make a slight change over here. What they can do is, when they are revising the content, for the third time, if they have time, they can pick up Bionic Turtle, they can start solving. So in this entire month they can do the start solving at least 2 or 3 book and complete it. Okay, because market risk, investment credit risk, you can complete easily. You will not find that problem because you are revising and solving. Okay, you can do the same thing in the previous bunch also, but that depends upon your comfort level, how much confident you are in the content. Okay, and finally in the last 5-7 days, where you get an opportunity to give mock papers, at least give 2 or 3 mock papers before you go for the exam. Okay, this is the entire timeline which I would suggest you follow for the exam. Now when you're solving the question bank, because I said you have to revise and solve, make sure that you bifurcate the question bank in such a way that you are able to identify out of the entire chapter how many questions were there, around 10, 15, 30 questions, which questions were easy for me to understand. Okay, which questions were straightforward and easy for me to understand. There will be definitely few questions which you were able to solve, but you took a lot of time. So I'm doing a different marking for those kind of questions. Okay, there are certain questions which are very unique, which you could not find in your base book, for example Sveja. Okay, there are certain questions which you could not even understand. The reason I'm asking you to do this bifurcation, because when you do your third revision, you would go back to those questions again. You would go back to the question again. Perfect. So let us start with the next section. I've talked about how to go ahead and start solving the question bank. Some tips for preparation. So for level 2 there are 100 chapters. I would say it is not 100, it is 200 chapters, because you have to revise it also. At least 2 times you'll have to go through that chapter. Okay, so you have to think from that perspective. Next, it is very theory based. Okay, out of 80 you will find only 10 or 15 questions maximum you will find related to calculation. Rest everything is going to be theory. But the problem is, it's a mixed question that will get in the exam. You will find a question which is coming from credit risk, market risk also combined. Okay, so be ready for those kind of questions. Don't get surprised where you're saying, okay, there are 2-3 content asked in a single question. Okay, so be mentally ready for it. Okay, and the focus obviously of the content is that there are 6 books. So you should be able to identify when you do your second reading that which book is easy as per your status and which book you find that you are not able to solve questions. Okay, so you should have that strength and weakness analysis of your own when you completed the second reading. Okay, now as compared to time level 1, the time will not be a problem for you because you have 4 hours to complete 80 questions. Only thing will be, since the content is slightly dry or slightly lengthy, you might have to read the question 2 or 3 times to clearly understand the requirement of the question. Okay, so keep that in mind, that you might have to read the questions in the exam 2 or 3 times. It's going to be mixed question. Okay, in the summary I would like to give you some important tips or basically important points, that at least read the content for 250 hours. Okay, overall, at least ideally. Okay, depending upon your work schedule, focus on completing 1 reading before 31st of July. Like I said in the first milestone, make sure that you read that content once. Okay, focus more on credit and market risk. Okay, because you will find a lot of connected questions coming from it, because it is also connected to your level 1. Okay, then you have to read operation risk and liquidity risk twice. That is what I would suggest, and hence I had given you that half hour slot. Give mock papers before the exam definitely, and look at the latest sample paper from the institute. Make sure that you have gone through that content. One advice that I normally give to level 2 students is that try to get a 2-week off before the exam, because see, it's more about consuming that 100 chapters again in that last 2 weeks before the exam. So if you have a proper holiday, then you would be able to read that content in a proper rhythm. That's the reason I generally recommend a 2-week off. Okay, and make yourself comfortable with the theory content. Don't think that I am not I'm not a theory person, because in level 1 there was a lot of content related to calculation, but over here you would not find that. Okay, it's very theoretical. So you have to love the content. Basically, you cannot just say I've read it twice, I've read it thrice. Just read it, and that benefit you will find when you reach in the last month of the exam. Okay, so that is a summary that I had for the level 2 exam. If there is any query from you guys, kindly post it on the chat section. I'll try to address it as soon as possible. Okay, for students who are new to our content, okay, so I'm Ganesh Naik basically, and I train for Fintelligent for their FRM and CFA curriculum. So we conduct live online lectures for FRM and CFA. We also give the video lecture package for the exam. For FRM level 2 we have a specific video lecture package. Okay, the details are there on our website. Further we also give only question banks. If somebody wants to prepare on their own and they need help and assistance in terms of preparing and enhancing their education, then definitely the test series will add value to them. Further, I'll be coming up with some interesting combination. For example, video lectures, people who have purchased video lectures, plus there will be some additional charge where they can come to the live online question bank solving of at least three book. Okay, market, investment and credit risk, because that is very critical book. So I'm planning to conduct that thing, and the sessions might start from July end. The admission for the same will start in the next week itself, where you will start taking the enrollment for people who will do video lectures plus question bank solving, and you'll go through. I'll be solving the live question bank with you. Okay, so when you're doing the revision, you will actually solve along with me. That is what I want to do. Next, in case you're looking out for some free material for FRM level 1 or level 2, then you can reach out to our WhatsApp number. We'll help you to guide with some free material and some free Excel plan of how to go about and prepare. Also, we'll be able to share with you. We have a Telegram channel which you can join, okay, where we constantly post regular updates, some free material also, and some content related to FRM level 1 and level 2 is also posted over there. Okay, I'll be taking a lot of live sessions related to level 2 and level 1, FRM level 2 level 1 related concepts which are there. I might not be able to take the entire chapter, but level 2 level 1 content I'll be taking. So tomorrow also I'm going to be taking a session on volatility smiles, the entire chapter. I plan to walk you guys through that, so please join for that session. Any queries as of now, guys? I'll be waiting for the next few minutes. In case of any queries with respect to the preparation, you can post it on the chat section. I plan to conduct sessions also with respect to individual book. What all important concepts are there for each chapter in that book. Like I have already done for level 1, I'll be doing it for level 2 also. In case of no queries, then there's no problem. You can reach out to me in case you have any further queries also in the next few days. You can reach out to me on this WhatsApp number. Okay, kindly send out a WhatsApp. I'll try to give you a call back as soon as possible. Okay, you guys can subscribe to our channel. Okay, because we're going to be coming up with more interesting concept related topics, live sessions for FRM level 2 also and level 1 also. Okay, so our YouTube channel is there. Details will be available for our LinkedIn channel and the Instagram channel on the descriptions part, so you can go through that also and join us, and we'll help you to clear the exam in the first attempt. We'll need your support also for the same, so make sure you enjoy this journey, and I will be there to guide you for this entire thing. Thank you very much guys for joining in. We'll be having more such exciting sessions in future. Thank you guys.